I will now turn this webinar over to Ms. Michelle for us to begin.
Hey, everybody. Thanks for joining us today. My name is Michelle Kuipers. I'm with the Ladder Up, and I'm the director of our tax clinic. I'm going to be speaking a little bit about sort of basic tax tips for self-employed folks. And then halfway through, I'm going to switch it over to Dan Bellarmino from the IRS, who's going to tell you about all the fantastic resources that the IRS has on their website for self-employed folks and small business owners just like you. We will have a Q&A at the end, so we're not going to address questions midway through, but I'll be trying to keep an eye on the presentation in the chat box. We'll hit a few questions at the very end, all right? So first, let's talk about some of the great free resources that the BACP and City of Chicago makes available through Ladder Up. So we're a nonprofit here in Chicago, but also we function throughout all of Illinois. We have an IRS Volunteer Income Tax Assistance Program, or a VITA program, which means that if you qualify to have your taxes done with us, you can have it done completely for free. We have our legal clinic, which is where I work, and we help if you have a controversy with the Illinois Department of Revenue or with the IRS. And then we also provide financial literacy lessons, both for college-bound students and also adult financial literacy, things like credit building, banking, retirement, things of that nature. So please, if any of these are intriguing to you, please look us up. I do want to talk a little bit more, since it is tax season, about our tax services that we have for you. So we help both self-employed and typical wage employed or retirees who have income for individuals of $32,000 or less, or for families up to $64,000. We'll do your taxes for free. For our self-employed folks and our business owners, we have some restrictions on the taxes that we can prepare in those categories. So if you fall into these income limits and you're interested in having your taxes done, you think you might have a little bit more of a complicated situation, I do advise you to reach out to us at the office. Give us a call. We'll let you know if you're in scope, and we can tell you when to come out. But the tax filing deadline is April 15th this year, unless you've had an extension. So while we're in mid-March, everybody's got about a month left. Make sure that you're either filing on time or you're filing that extension on time. Here are our tax sites. I'm not going to keep it up very long, but as I said, you can find all this information at our website, goladderup.org/locations. If you are questioning whether you qualify for our services, but you're within our income limits and you're really interested in having your taxes done for free, please reach out to us and see if you qualify for it. But for now, we're going to move on to some of those basics for self-employed and small business owners. The first question that everybody should always be asking is, do I have to file a return? So let's talk about the filing requirement for self-employed. For W-2 wage earners, it kind of varies depending on your filing status or your age, but for our self-employed community, it is always, always, always going to be if you have net self-employment earnings of $400 or more. Now, my savvy audience members are going to go, hang on, $400 is not even enough to file a 1099. So if there's no 1099, do I have to file anyway? I think that might be part of the point, is even if you have cash income, even if you are not reported on a 1099, if your self-employment hits $400 or more, you are required to file a tax return. And you're required to include everything else on it too. So $400 is our magic number. It's regardless of your filing status, regardless of your age. I think it's also important to know the difference between whether you are a self-employed independent contractor or whether you're an employee. These slides are more targeted towards sort of the payee who's receiving the money, but also my business owners out there. It's really important to know the people who are helping your business that you're hiring. Are they considered employees, or are they considered independent contractors? And should they be? And whether you're following the correct rules about that. So we're going to go over a little bit about what's an employee, what's an independent contractor, what forms they need to have, and how taxes work for both of them. So this may apply to you for the independent contractors. It will apply to you if you plan on hiring people, or you will hire people right now to help you. So the question, what's an employee, what's an independent contractor? It seems pretty straightforward when you think about it, but the IRS rules are different than sort of what we think of when we think of those words. So it's always important to know. So what does it mean to be an employee? An employee can be full or part-time. It can be, but the real limitations on it are whether you're working for a specific company or a specific person, whether you have a set schedule that you do not have control over, and whether you have very specific job descriptions that you're required to meet. It's not based on the benefits that you qualify for, because employees could qualify for health insurance or retirement. They could not be included in health insurance and retirement. That depends on other factors. So it doesn't come down to just, do I have benefit? It comes down to whether your schedule is set, whether you have flexibility in your hours. The employer in the situation is usually going to request that person file a Form W-4. This is the IRS withholdings form. There's also an Illinois version for Illinois withholdings. This form is what informs the employer how to take taxes out of your paycheck and prepay them to the IRS on your behalf. So having those withholdings is what is going to be sort of make or break on whether you owe on the return or get a refund back on the return most of the time. There are other factors, of course, but the withholding is the biggest one, because it's, have you already paid your tax burden at the end of the year? So if you withhold more, you might get a refund. If you under withhold, you may owe, and we don't want anybody to owe on their taxes. So filling out that W-4 accurately and having your employees fill out that W-4 accurately is going to save everybody a lot of headache, especially if they come back to you and they say, how come I owe thousands of dollars on my taxes, even though I'm an employee? Independent contractors, on the other hand, so we had employees, set schedule, set person, set hours, right? And an independent contractor is going to be more freelance. They get to pick their hours, they get to pick their time, they get to pick their own schedule, and they can say yes or no to jobs and projects, as opposed to being told specifically, you got to do these things, you got to do them when I say, and you got to use my equipment to do it. That's the other big thing about independent contractors. Generally, they're using their own tools, their own equipment. It is not provided by the person that they are working for. Anyone who's paying an independent contractor typically has that independent contractor fill out the W-9 form. This is the parallel to the W-4. The difference being the W-9 form does not have any withholdings involved. Typically, I'd say 99% of the time, an independent contractor is not going to have taxes withheld in advance through their pay. It's going to be up to them to do their taxes and to pay them in advance. We'll talk a little bit more about that. Since you control your own work and your own hours and your own tools, the independent contractor and the self-employed person has the luxury of taking deductions for their business expenses. Deductions lower your taxable income before the tax is applied. So it can bring down the theoretical tax bill because you're spending money on your business. However, our self-employed people, our independent contractors, do owe an additional tax that is a little different than the employee. It's called the self-employment tax. It is 15.3%, and it is entirely made up of Social Security and Medicare. When you are an employee, or when you have employees, the employer pays a portion of the Social Security and Medicare, and the employee pays a portion of that. When you're self-employed, it is all on you to pay that 15.3% for Social Security and Medicare. It is hard at the time. I know a lot of my self-employed people fight against this one, but it is for you and for your future. So it's important to keep that in mind, that there's this additional tax on top of your normal income tax for self-employment, because you have to pay towards those Social Security and Medicare expenses. We'll talk a little bit more in a second about how to track expenses, so that way you can claim those deductions, try and bring that taxable income to where it's supposed to be. But first, I want to go through, we're just going to recap. So if you have an employee, or you are an employee, someone controls the when, the where, and the how of how you do your job. Somebody else pays for your tools, for your supplies, and somebody else controls your tax withholdings. You usually receive a W-2 at the end of the year. If you're an independent contractor, or you're self-employed, or you have independent contractors working for you, the work is controlled by that person. They get to say yes or no to the schedule. They get to say yes or no to the projects. They bring their own tools and supplies. The payor is not responsible for that. Taxes are not withheld from their pay, and they have to make quarterly estimated tax payments in advance. The IRS will still require it. We'll talk about that on the next slide. And this person typically receives a 1099 form at the end of the year. So what are these estimated tax payments? Since no taxes are coming out of the self-employed person's income, you are still expected to pay that 15.3% self-employment tax and your normal income tax. And if you are going to owe more than $1,000 at the end of the tax year, you are expected to pay that in advance to both the IRS and the Illinois Department of Revenue. Illinois Department of Revenue doesn't require 15.3% though, but you do have to make payments in advance to both. So those payments are generally supposed to be the percentage of tax that you're going to owe at the end of the year. There's other ways to figure it out that Dan might go into, but there's calculators on the IRS website and forms to use there. But they are due every quarter. So they're often called quarterly estimated tax payments or quarterly payments. So the first one for the first of 2024 is also due April 15th, the same day as your tax returns due. So what we would like you to do is take all the income that you earned for the first 3 months of the year, January, February, March, and pay your percentage of tax towards that due on April 15th. The other dates follow along every 3 months, April 15th, June 15th, September 15th, and then finally January 15th of the following year. The reason why $1,000 is the magic number where these are required is because if you owe over $1,000, the IRS can assess a certain penalty against you, usually called an underpayment penalty, and sometimes a failure to pay penalty. So basically just that it wasn't paid all at once when you filed, that's the failure to pay penalty. Underpayment penalty comes from not paying those estimated throughout the year. So even if you pay everything up right on April 15th and it's in the IRS's hands, you can still get that underpayment penalty if you're required to make estimated tax payments and you aren't. So this is really important. I really stress that everybody should be making those estimated tax payments. But let's get to the fun part, the part that everybody loves, which is what are good business deductions. First, business deductions always depend on good business record keeping. So I want to walk you through all of the record keeping that we want you to have when you're getting your taxes done, just to make your tax preparer's life much better and easier, but also to defend yourself against an audit in the event that the IRS ever audits you. And remember, sometimes audits are completely random. It is not necessarily targeted. They could just pick you out of the list and say, hello, we'd like you to verify everything on your return. It is important to keep adequate business records. So that way, instead of scrambling in 2 years when the audit comes through, you have answers for everything. You can just produce that right away and say, here we go, we got proof of everything. So I'm going to go through each one of these, but this is what I recommend as far as business record keeping. The first one is a business plan. What's a business plan? A business plan is really just describes your business, but these are kind of not one size fits all. They will vary depending on your industry, depending on what your business type is. But usually it'll document the organization structure, if you have one, what products you sell, what service lines you sell, if you sell services, market analysis, sometimes marketing strategies. If you're like, I sell this and I market on Instagram, right? If there are partnerships involved, if there's other things, usually about a 5-year plan for where the business is going to go. You start out selling your bakery, you're going to expand into selling to stores, selling pre-wrapped things versus selling cakes, right? So why does the business plan matter for taxes? Because a lot of times it's usually used for funding, right? This is how people get loans. This is how people get venture capital funding, that you need a business plan, but it does matter for taxes. And in the event of an audit or in the event of having multiple businesses, your business plan makes it clear what expenses and what income fall under that business versus expenses and income that don't. So you think of a personal trainer, if they're buying fitness equipment, if they're buying space to have classes, those all make sense within the business plan of a personal trainer. If you're the bakery that I talked about, buying flour, buying, vanilla extract, that makes sense for a bakery. But if I had a personal trainer who's buying vanilla extract, it doesn't sound quite right. If I have a bakery who's buying a sauna, why does a bakery need a sauna? So your expenses that you're claiming have to fall within your business plan. And having the business plan will help at the start of that audit if you ever are audited, and it'll help your tax preparer too. I did want to throw in some resources down here for crafting a business plan, but also guides for how the business plan can be used. The U.S. Small Business Administration has really good guides on how to craft a business plan and how to craft it if you're looking for funding versus other things. The Women's Business Development Center down wbdc.org also has classes on how to create business plans and has guidance. And then score.org has business peer-to-peer mentoring. And so having a business peer to craft that business plan with you might really help. All of those should be either government or our other nonprofits that I recommend. What's our next one? Business calendar. This is pretty straightforward. And my examples here are handwritten, but any of this can be done with apps or with digital resources, right? You can do this on the computer, you can do this with a Google Calendar, you could do it with Outlook, whatever. Any of this can be made digital, but I'm showing you that it can also be done by hand. So at the core of it, a business calendar, in my example here, we have a massage therapist, right? So this massage therapist, he went to a business conference, he went to a massage conference, and then he has some business lunches logged, and he has some actual massage times with clients. All of this is included in his business calendar. And it's just good because you want to keep that separated from your personal calendar. So if it ever needs to be seen, it is all just completely separate. And why might the business calendar be seen is because I also want you to keep a logbook. This is going to show everything that is coming in for your business income, everything that's going out in expenses. So our massage therapist here, you can see the first entry on his business logbook is that conference registration. Expenses $450. Well, now it's also in his calendar. So if he ever has to prove that this was a business expense, he says, hello, here's my business logbook. Here's where I bought the pass to the conference. Here's the dates in my calendar where I went to the conference. You know, it all marries together to show that he was actually doing business activity. It actually cost what he said it did. And that all marries onto the taxes. So keeping something that is just income coming into the business, expenses going out of the business. It's really simple. It's just the date that the thing was purchased, the description, how much it cost, right? Nothing that is going to be too time consuming, but even just taking that little bit of time to write it down in a business logbook or keep track of it is going to be vital. Then I want you to, if you are driving for work, I want you to keep a mileage log. Anyone who's using Ventra, keep that in your logbook. But a mileage log is really crucial if you do plan to claim your mileage on your taxes. And this one, again, handwritten, but there are apps like Stride and other apps that actually will let you track while you're on the job, especially for my ride shares. If anyone's doing gig work, doing ride share or other type of services, some of those apps are invaluable because the core app that you might be using, like your Ubers, are not going to track every single mile that you're driving while on the job. So this is our massage therapist logbook. He did it by odometer. That's not a problem, but he has the date, he has where he went, and he has beginning mileage, ending mileage, and then he has, I like how he has columns for business and personal. So he can technically log all of his miles and just make sure it's in the business column or the personal column. Now, next we're going to talk about commuting, but I do want you to make note here. He has, home to client JR. Then he has the same day, a different trip, JR to RB. So keep this in mind as we go to the next slide, because the IRS has specific rules about whether you can claim your commute or not. So in this case, our massage therapist, his name is Mark. So Mark, if he was doing all of his massages in a studio space that he owned or rented for business purposes, his first commute of the day to the studio space and his last commute home counts all as commuting miles. These are not deductible on your business Schedule C. These are not deductible miles. The first trip of the day, the last trip home counts as a commute. This is something that all of the W-2 employees out there have to deal with. And so the IRS is not letting you claim it either. Now, going to the far right, this is an example of if Mark does not work out of his home, he doesn't have a home office, and we're going to talk about what home office means in a second. But Mark's trip to JR, that's not deductible. That's his commute. But if he were to go to JR's house and then go to a different client and then go to a third, like the vendor, and then head home, he does get to claim the miles between clients for business trips of the day between business destinations, but his last trip home still counts as commute. The middle example here, where it says Mark has a studio out of his home, he gets to claim all of his miles. He doesn't have, he can, it's not a commute there because his business and his home space are the same. However, the IRS has very specific rules about the home office deduction. What can be claimed as workspace in the home for small businesses and self-employed people. And it generally means that you have a restricted space, usually a full room in your home that is not used for any other purpose except business. You can't even walk through it when you're not working. And that square footage can count as business use of the home, but it is a very restricting. So that I want you to, if you think this applies to you, we can talk about it. But a good example is if you are doing, if you cook and you're selling food, sort of catering, and you're doing catering out of your home, and you're using the same kitchen that you prepare your breakfast for your own personal use, that is not home office deductible. You don't get to deduct the space. You don't get to deduct your utilities for it, and you don't get to deduct any commute, right? Your commute to clients has to be excluded from your business miles. This is a little confusing, but this is one we get a lot of pushback at the site. So I really want to stress that commuting miles are not deductible unless you qualify for home office deduction. Let's keep going. We do have certain forms I wanted to talk about, which is, and I skipped over it earlier, but I do want to note it because I thought I had a slide, but I don't. Business bank account. So the best thing you could do for audit defense is open a business bank account and run your whole business out of that bank account. So that way it is fully separate from your personal income and your personal expenses. That is the perfect thing if you ever have to demonstrate. And also it'll marry with your logbook. Remember, we want everything to marry together. Our conference attendee, here's the bank statement where I bought the conference pass. But if it's next to your Taylor Swift tickets, it becomes a lot more jumbled. So if you have a business bank account where you restrict the expenses separately, that's what we recommend. But I do want to talk about tax forms and entity types. So generally, for a self-employed person who is not have a formal business, you're going to be considered a sole proprietorship. For the rest of these, partnerships, limited liability, and then the two corporation types, all of these, for your business to be any of these, you have to register it with the state, and you have to file to be that entity type. So if you didn't do that, you're going to be a sole proprietorship. Even if you and somebody else are working on it together, if you haven't filed for the entity type, you're likely going to be sort of non-formal partners. But if you have a sole proprietorship, the forms you have to file are the 1040 form, which is the general tax return for individuals, the Schedule C, which is where those business deductions come in, and the Schedule SE is SE stands for self-employment. If you do have a partnership, each partner files those individually, but you also have a special form that the partnership needs to file, Form 1065. If you have a limited liability company, even if it's a pass-through, you have a special form the limited liability company has to file, and then you will file your own 1040 and Schedule C, even if it's a pass-through. The corporations have different forms, depending on the type, 1120, 1120W for a corporation or a C Corp, and then the S Corp has 1120S, and then often issues K1 forms to each individual member or partner, and then there's some other forms too. These are only just an overview. Dan's going to show you exactly where on the IRS website you can get more info about the filing requirements for your organization type. And I think on that, I will flip it over to Dan, but I do want to say it is possible that you might have to register your business also with the Illinois Department of Revenue. So if you do have a business, make sure that you're following those requirements too. They're separate. Go to IDOR's website, look it up. But I will toss it over to you, Dan.
Thank you, Michelle. Oh, yeah, thank you, Michelle. So my name is Dan Bellarmino. I'm a senior stakeholder liaison with the Internal Revenue Service. What we do is we do outreach like this. So on my end, I'm going to present about the IRS tax tips, resources for entrepreneurs starting and operating a business. So next slide, please. So the agenda for this is about the tax information for businesses, starting a business, operating a business, IRS, and other federal resources that will help you grow your business. All right, so next slide. So on this slide, regarding the tax information for business, as you can see, we separate, there is an actual page in our website, irs.gov, for small businesses. It tells you about like the EIN, employment tax, estimated taxes, and the Foreign Act or the FATCA. Now, there's a definitions of everything that you need to know, when you need an EIN, where can you apply for an EIN? It's all there. All right. So that's one of the things that I would recommend to, if you go to our website, go to this site, irs.gov/business. All right, next slide. So when you're starting a business, congratulations. There are things that you have to consider first. As Michelle was like mentioning about, start with like a business plan. How are you going to do your business? And from there, even go to our website at the irs.gov to see what are your requirements in starting a business. So on this slide, on this slide, it starts like the information on starting a business. Now, if you want to see on this what new business owners need to know about, the first bullet there, it's a business or a hobby, because that's where the confusion sometimes arise. So can you do the next slide, please? So there's most small businesses starts as a hobby. There are some, the IRS made some determination on whether you can claim certain thing as a hobby income or a business income. So for instance, in making a distinction between a hobby or a business activity, you have to take into account that all factors and circumstances with respect to the activity. Now, a hobby activity is an activity not done for profit. So it's just pastime, most of this including mainly for sports, recreation, or pleasure. So it's not for profit driven. So when you start a business, you kind of think about profit, and so making money. So the IRS put some distinctions on whether you can claim certain income as a hobby income or business. And there's like, difference between what you can claim as an income or how you can claim it on your taxes as an income and what type of expenses you can deduct. So that's one of the things that I want to point out between business versus a hobby. Next slide, please. So regarding the next slide here is about choosing your business structure. I've seen where some businesses, small businesses, this makes a difference on whether they're very successful on their business or not, because some of this, as mentioned by Michelle earlier, some of this business structure has their own forms that you have to worry about. But it has some good and bad benefits. So you have to look at how you want to structure your business. And it started with like your plan, how you want to grow your business. What type of business are you going to do? Are you working with somebody? Are you asking for people to join your business? So that's where you're going to look at. And on this slide, it can provide you the definition of a partnership, a sole proprietor, a corporation, S Corp, and so on and so forth. All right, next slide, please. So EIN. Now, if you're, what is an EIN? An EIN is a 9-digit number, just like a social security number. What an EIN does is it's not just for filing purposes. Because for instance, if you're a sole proprietorship, you don't technically need an EIN. You only need an EIN for certain things, such as if you want to hire an employee or you need a bank account. So that's when you need an EIN for a sole proprietorship. But for a partnership, S Corp, those kind of stuff, or corporation, you are required to have an EIN because there's a separate form that you have to file, such as the 1065 for partnership, 1120S for S Corp, and of course 1120 for a C Corp. Now LLC, that's a different beast. For the IRS point of view, for taxes purposes, you can be an LLC and treated as like a sole proprietorship. So therefore, you are not required to have an EIN for IRS purposes unless you want to file for you were hiring somebody as an employee or creating a bank account. All right, so next, please. Now, our website, we have a, you can apply your EIN online. You don't need to fax or submit a paper I can't remember the form now, but you know, everything is online. You can go to irs.gov/EIN. This is the fastest way that you'll get your EIN number. And in fact, you can do it in 15 minutes and you get that form or that letter that we assign you an EIN. And then you can submit that, or you can use that to open a bank account for your business. And even if you have to register to the state, you can use that EIN. All right, so next slide, please. All right, so on this slide, it's understanding your business taxes. So you know, there are different types of taxes that you have to pay for your business, depending on how you conduct your business. Everybody knows about the income tax. I know Michelle mentioned about the self-employment tax for independent contractor. That's where, if you're a sole proprietorship, that would be a Schedule SE. And of course, there's what we call the estimated taxes. Now, she mentioned about that one earlier, that every quarter you're supposed to pay to the IRS. So when you file your return, you don't have to owe that much, and you're not liable for underpayment for the estimated tax, or what we call estimated tax penalty. As you know, the tax system of the US government is pay as you go. So technically, when you make the money, the government needs their share. So that's how I describe estimated tax. But on this slide, it provides you information. What is an income tax? What's an estimated tax? What's a self-employment tax? What's an employment tax? And of course, what's an excise tax? So it tells you what's that. It gives you more information. And so when you're starting your business, you may wonder what other taxes you have to pay besides the income tax. All right, so next slide. So on this slide, this is an example of what common forms we're looking for. So when you're what we called a sole proprietorship, the first that we see or we are looking for is on your Form 1040 is you attach a Schedule C. Now, if it's more than your self-employed, or your income is more than the $400 threshold that Michelle mentioned about, we're expecting that you have to attach a Schedule SE. So it's from here we're looking at the Schedule C, and then whatever forms that let's just say you deduct certain things on your Schedule C, it adds on what type of forms you need to include on your Form 1040. Now, on the middle here, this is what we called 1120S, the the S corporation mentioned. What an S corp does is it's going to be treated as a flow through. It's just like a partnership. You'll get a K1, but as you can see, it's still on a Form 1120S. Now, if you're a C corp, this would be the 1120. Now, if you are a LLC, as I had mentioned again, you can, for tax purposes, you can be treated as a sole proprietor, a S corp, C corp, or a partnership. Now, what's missing in this slide is the Form 1065, and that's for the partnership tax return. All right, next slide, please. Now, for more information about the limited liability companies or LLC, please look at publication 3402. It provides you information on how you're going to be classified, what forms you need, because you can still be elected to be an S Corp once you filed in a limited liability company. So this publication provides you that information, how you're going to be treated, what forms you need that you want to be treated as like an S Corp or a C Corp or even a partnership. All right, next slide, please. All right, so estimated tax. I don't know if you're aware, if you're an employee, there is what we call a tax withholding calculator that you can use in order for you to determine whether you have enough withholding when you file your tax return. Because nobody wants to have a surprise when we file our tax return. Now, publication 505, this is the tax withholding. Now, if you're an independent contractor, self-employed, you can use this publication 505. It gives you a worksheet that you can use in order for you to determine how much payment, quarterly payments that you have to do. So when you file your tax return at the end, you'll avoid paying what we call the estimated tax penalty, and your liability is not too much where you have to scramble and find ways to pay that. I've seen a lot of businesses when I was because prior to this position, I was a revenue agent. I've seen where people doesn't have enough withholding or estimated payments that their liability was so high that they can't or they're no longer able to pay their liability, and therefore they have to shut down their business. That's us at the IRS level. We don't want to see that. We want everybody to be successful. The more money you make, the more, of course, funding that the IRS can get. All right, so next slide, please. Now, this is your self-employment tax. It tells you why you have to pay a self-employment tax. What is the reason for it? Just to make sure that you understand, self-employment tax is about the Social Security and Medicare taxes. The one thing that I would give an example for this is I have a neighbor here who is like about 60-something years old. No, close to 70 years old, but he is still working. He is a roofer, so he's an independent contractor. He told me that he still have to work because he is not able to collect Social Security. So therefore, when he was younger, when he was, making those under the table payment and not paying enough Social Security or self-employment tax, that he could have retired right now and start collecting those Social Security. So that's something that you have to think about. When you're old enough, do you still want to work? Do you still want to do the same thing that you were doing 20, 30 years ago? So paying your self-employment tax will benefit you in the long run. So another example that I can provide you with is like an elderly gentleman that came into one of our office and says that Social Security, according to Social Security, he's missing about almost $8,000 of self-employment tax because he switched from being an independent contractor to he has a passive income. Passive income, those are like rental properties. So instead of paying, he treated himself as like an owner for the rental property. So he's not paying any self-employment tax. So he came in, he was like almost 80 years old, and he was not able to get Social Security because he doesn't have enough credits or payments made to Social Security. So that's why I keep insisting, not keep insisting, but keep informing people that self-employment tax will benefit you in the long run. All right, next slide, please. Now, excise tax, there are some business activity that you are required to pay excise tax. One of the things that I want to mention about is if you're a trucker, Those are the heavy trucks that the tractor trailer, basically. They pay heavy highway use tax. So it depends on what type of business you have. You may have to pay excise tax. So publication 510 provides that information, as well as in our website about excise tax. All right, next slide, please. All right, so employment tax. So those are, because you as an independent contractor, you can treat yourself as a employee of your business. So you don't really have to do your business. Let's just say you're a sole proprietorship and you want to be treated as an employee of your business, you can do so. So on this page, we mentioned about employment tax. So it adds up another layer of form that you have to file, such as the 940 ones, 940. It's a little more complicated, so you may need to talk to your preparer in order for you to do so. It gets involved because you're talking about a monthly payments or monthly deposit, quarterly, or even weekly deposit, depending on your income. But for more understanding about employment tax, I would recommend to go to this website, to our website about employment tax, and start reading. So you don't really have to do those estimated payments that you have to or normally do when you're an independent contractor. All right, next slide, please. Okay, so as mentioned about understanding about your federal income, there's I mentioned there are several differences between taxes, right? There's the income tax, basically, that's what you have to pay because of your earnings. Employment tax, that's mentioned about the Social Security and Medicare taxes. Basically, that's when you retire and can collect Social Security. There's a computation on how to do that. And so I would recommend to go to this one, and it provides you more information. Now, on the next slide, there is more to being an unemployment tax. There is an additional tax. Those are for high income taxpayers that they pay additional, I believe, 1% if they earn more than $200,000. I'm so sorry, not 1%, it's 0.9%. And of course, there's what we call the federal unemployment taxes, which is the FUTA tax. Those are for basically insurance for unemployment. Now, I mentioned about depositing, so that's where I told you about it can get involved between when you have to make those employment tax deposit. Publication 15 provides a guidelines on how to do that one. And so, but if you decided not to participate on employment taxes or paying 941 or 940, then you can still stay on as a self-employed individual and making those self-employed estimated taxes. All right, so on the next slide, please. Now, if you do decide that you want to hire somebody, there are some payroll service providers that will give you or take off those on your hands, so you don't have to worry about those deposit and making those 940, 941 payments. So on next slide, please. So as mentioned about those payroll service provide the payroll administration, tax reporting responsibility for their client, for their business and clients. So you don't have to worry about it, and you don't have to think about what you need to do. They'll take care of that for you. So it makes your life a little easier. But of course, they charge you with a fee. All right, next slide, please. I think this is more for the employee and independent contractor. Publication 15A provides you with that information. Also on our website about the independent contractor, self-employed or employee, gives you about those things that Michelle mentioned earlier. So I'm not going to go over that. I think she did a fantastic job in this determining the difference. Now, on the next slide here on SS8, let's just say there is a confusion and you want the IRS to make the determination. This can be filed by an employer or by an employee, and we will make a determination for you. So that confusion or that gray area will make that determination. So that's one thing that I want to mention about the SS8. So on the next slide about the record keeping, I think Michelle provided an excellent information about the record keeping. We highly recommend to have a record keeping for each of, if you're a small business. When I was a revenue agent, it's one of those things I always ask my taxpayers or the people that I'm auditing, what documents you have to show your income and your expenses. Mind you, expenses, the taxpayer has to provide documentation to substantiate the expenses that they claim on their tax return. All right, so next slide. This is more for the business record keeping system. Make sure that you clearly notify about the total income, expenses, and how the record keeping system, or how do you document your records. Most small businesses use their bank account as their record keeping. That's why it's more important, or that's why I always recommend to separate a business bank account. Don't commingle them. Please, that's one of the things that gets you in trouble as a small business. Once the line gets little blurry, it's really hard to distinguish which income or expenses you can claim on your taxes. All right, next slide. All right, so this is some of the example. You can do a daily entry, monthly, weekly. It depends on you. You dictate. You as a small business, that's your determination. What makes it easier for you, as long as you do have one. The next slide, please. Now, electronic records. Everything now can be digital. So if it's make it easier for you to do the Excel or other software, do so. As long as there is one and it clearly can show the difference between your business income and other incomes that may come in or transfer from your bank account. Next slide, please. Now, all right, I think I keep mentioning about this, establishing separate business account. It is very important. I've experienced where taxpayers cannot discern which bank account is their business. If I have even an example of one taxpayer who have multiple business, and his spouse has multiple business, so they can't even discern which income which. So it was like all commingled. So guess what? When you can't tell me which one's yours, which one's theirs, it's very hard, and there's some major changes on their returns because they can't provide me with the necessary substantiation on the expenses that they claim. All right, so next slide. The first things first in any business is to determine about your gross receipt of your income. So these are the example of what we look at: your cash register if you're using, bank deposit slips, invoices, credit cards. I can go on and on. I have an example for it where a taxpayer have a difference between what's their total invoices and what's reported on their return. So of course we make the necessary changes, and they have to pay more taxes. Plus, because it was already IRS made some changes, there's going to be some penalties that we have to assess. Not only penalties, but interest as well. So next slide, please. So asset purchases, canceled checks. So as you can see on this one, we also need all this information to substantiate when we're looking at your expenses that you claim on your Schedule C or 1120 or 1065 returns. All right, so next, please. Now, the asset, there is what we call capital asset that we look at, and sometimes a lot of taxpayers want to expense them out, there are some assets or capital asset that you have to what we call depreciate. So you have to use the life of the asset. And part of that is including like the disposition of the asset. How much did you gain back? So let's just say I had a car, I depreciated. Then when I sold it, there's an income there, right? Because you already claim all of the life of the property. So once you sell it, that's technically an income that you have to report on your return. All right, so moving along, because I think there's more slides or information. Now, regarding operating a business, we have our website. You can go to that one. It tells you from EIN, record keeping, if your business changing, you know, name change, when you have to change, let's just say you expanded from sole proprietorship, now you're growing, you want to be a C Corp. Do you need a new EIN? So this website provides you that information. All right, so next slide, please. Okay, so me at the IRS always tells you to report all taxable income. Okay, we do verify that when we audit taxpayers. We make sure that they matches on all of these, the cash, check, credit cards, invoices. We all look at those. Okay, now next slide, please. Of course, we do know that when you're operating business, there are some expenses and some are credits that you can utilize. So on this page at irs.gov provides some of the credits that you may qualify as a small business. I highly recommend that you go to our business tax credit. So that would be the business and self-employed section of our irs.gov. Next slide, please. All right, so I think I've mentioned about like information about record keeping. You also have to worry about those disasters now. Make sure you have copies of that, because it's very hard when there's a disaster and everything is lost. You have to recreate from scratch, and you may miss out some of the expenses that you may be able to claim. All right, next slide. So the common errors that we always see as underpayment of the estimated tax, not depositing employment tax, filing late of the return, and of course, I've mentioned this 1,000 times already, not separating business and personal expenses. Next slide, please. Now, when you do choose a tax preparer, make sure, you know, there's a lot of fly-by preparers, unqualified preparers, and most of their, you hear from somebody that says, oh, that person is good, they gave me more refund than everything. If it's too good to be true, it is. Even on our website, there is a link where you can choose a preparer. Please go on the next slide, please. So on our website provides you with information, and you can even get a list of preparers that we recognize or that are registered in our website. So you can do so. Please go there, and then you can start vetting for your preparer. All right, next slide, please. Now there's electronic payment options. So you can file your, we highly recommend to file electronically, pay everything electronically. It's much easier. When you do by paper, there's a lot of chances that we misplace them. We don't record them properly. Next slide, please. Now, EFTPS is another avenue. Now, EFTPS is run by the Department of Treasury that goes to the Treasury information or Treasury bank account. So we at the IRS don't handle that information. But that's another avenue where you can make a payment. All right, next slide, please. Now, identity theft, it's not only for individual, but as for business as well. It can go even for exempt organization. There's a lot of bad actors that are stealing information, and they use it to file a tax return, to claim a credit or certain things. So please protect yourself you can go to publication 45 or 4457, safeguarding taxpayers' data. Because as a small business, sometimes you have taxpayer data on your record. Now, next slide, please. Now, this stay information, we have a lot of information, useful information that we shared to our clients or to our taxpayers. It's up to you if you want to register, and you can get those up-to-date information from the IRS. Next slide. This would be the Small Business Self-Employed Tax Center that you can look and start learning from what are the things that you can use or can be beneficial for you. Next slide, please. The e-news services, you can register if you want or to subscribe. And the following slide, next slide, is about our social media presence. As you can see, we're everywhere. So it's up to you if you want to, we highly recommend to connect with the IRS. Now on the next slide, please. This is our IRS video portal. So it's our own that you can look at, and there's like individual business and even for tax professionals. Next slide, please. Now we do have a small business tax worksheet or workshop. It's a lesson 1 to 8. It gives you from starting your business to hiring from international. So those are a good information to have if you need more information on starting a business or expanding your business. Next slide, please. Online tax calendar on irs.gov provides you with the information, the critical deadlines, when you have to file your estimated payments, filing deadlines on your return. Okay, so highly recommend to go there. And then your online account, this is this has been there since I don't know, 20 years ago. We created the IRS online account. It's basically now like a bank statement. You can access your tax record, make payments, set up a payment plan, and so on and so forth. Now, the next slide would be the business tax account. All you have to do is just once log in to your online account and your business account. It's the same. It will make a separation from your personal and your business. It gives you a payment option as well as like filing requirements as well. All right, so the next slide would be the IRS system. IRS system is to file those information return. Starting this year, if you have 10 or more information returns, that's including W-2s and 1099s, you have to e-file them compared to 200 or 100 before. All right, next slide. The next 2 slides here are the IRS publication that was mentioned on this presentation. I know I was rushing, I apologize. And the last one is the IRS contact information, the toll-free number, and the business, and of course the excise one. I apologize if I was rushing or talking too fast.
All
right, Michelle?
It's a lot of info to cram in, but I think a lot of it is good. And this will be uploaded, I think, to YouTube, so people can review there. We did have some questions in the chat. I think we're pushing time, but I do want to address one that came up a couple of times, which I think is people are asking about sole proprietorships versus pass-throughs, and if I have an LLC, how do I do this? So I just want to specify that if you're an individual and you have a registered LLC, but you're the only person working your business and you're not having any employees and you're not paying anybody, you are usually what's referred to as a pass-through LLC, which means that all of the profits for your LLC pass directly through to you as an individual. So they all appear on your individual taxes on your Schedule C form, and they appear as self-employment income on your individual taxes. For those pass-through LLCs and my sole proprietors, because I had sole proprietors in the chat asking, estimated tax payments are required for both of you. A sole proprietor is still required to have estimated tax payments paid. The IRS expects them every quarter. But the pass-through LLCs, a lot of that is going to be, you're going to be essentially the same as a sole proprietor for tax purposes. The LLC is protecting you. The limited liability part of the LLC is protecting you from other types of legal issues. It is not sort of tax related for that person. And then I think we had one more, just maybe we'll end it out with that one. We had like a lot of questions, but I think I just want to hit the ones that are going to be most relevant to most people. But Dan, if you could answer this one. Somebody asked if it was if they should register their entity type first and then get an EIN number, or if they should get an EIN number and then register as a corporation or an S Corp or an LLC.
I think they are required to have an EIN number first before they can register at the Secretary of State. So,
So that
right,
answers
that's,
that. The EINs
yeah.
first. And I do want to add another note, which I don't think we hit, and I don't know if I've hit before in this presentation, but you can get an EIN number on the IRS's website for free, or by mail for free. If somebody is saying, hey, pay me money and I'll get you an EIN number, do not give that person money. You can do it on the IRS website like now, okay? Don't pay anybody to get you an EIN. But I think that I want to thank everybody for their attention and time. I know we didn't get to everyone's questions in the chat, but I work for Ladder Up. If you want to reach out to Ladder Up, I'm happy to answer any questions. Our website again is goladderup.org. I'll try and put my email in the chat if anybody wants to send me an email specifically. And I think that will wrap it up here. Do you have any last thoughts, Dan?
Oh, no, April 15 is coming up. So if you can't file by the due date, please file an extension. Remember, an extension is only extension to file, not to pay. So if you think you're gonna owe money, pay as much as you can by the 15th, and then any excess, you'll receive it as a refund. So
Yes.
that's the only 2 cents I can give. And if you're a partnership, S Corp, or a corporation, March 15th is the deadline. So that's why sometimes those business structure can make or break a small business.
Absolutely. So April, make sure you're filing on time, but the IRS's philosophy, I know this, is file right the first time. So if you have to file an extension to get it right, please, for my sake, for Dan's sake, get it right
Say,
the first time.
we really don't want the taxpayers to come in and say complaining about, or not complaining, but saying that, you know, why we make necessary changes. We want you to file the correct way the first time. So there will be no more issues. And as far as you know, the IRS was like having difficulties during the COVID time because of paper backlogs. So that's where we're trying to avoid. And by filing electronically and doing it the right way, no more paperwork.
Well, thank you
All
so
right.
much, everybody. Thanks for having us. Thank you to the BACP.
Thank you.
Thanks for
Thank
joining.
you very much.
If you are a part of the BACP Entrepreneur Certificate Program and would like to receive credit for today's webinar, please visit chicago.gov/BACP webinars, and chicago.gov/BACP certificate. Thanks again to today's presenters, and we'll see you next time.